All right. What's up? It is Cowboy. It is 8:32 AM EST. EST is what matters in the markets. And I have an announcement to make. I'm selling all my crypto. Just kidding. I'm not doing that. Um, I think that the future is bright with Bitcoin and crypto, but I do think that we are seeing just a bit of a consolidation, bit of a pullback. And I've been doing shows about it for weeks now, ever since that all-time high of 74,000. Bitcoin is taking a break. And as long as Bitcoin remains stable and above 60,000, I do believe the other cryptocurrencies will recover and catch up. But there are always going to be, with Bitcoin, these strong, hard moves down, right? So let me go ahead and share the screen. And if you have any questions, if you have any charts that you want to see, go ahead and ask them in the comment section. We may be having a bit of a schedule change, so keep your ears open for that. That's something that we will announce if we should decide to do that. It won't be a huge change. Maybe start, I don't know, a little bit later, possibly. We'll see about it. But for now, no changes. All right, so we got the Bitcoin chart up, and let me make this screen a bit larger. We are looking at the daily chart, so we're going back all the way to the beginning of March, basically. If you look, I mean, the far left is the beginning of February, but most of the price action that is relevant is here at the beginning of March, and still in the range that we have been talking about for a few days now. I hate to just completely define this as a range. It's a little messy. It's not as clean as I would like, but this looks to be what's going on right here, right? There's some decent price action that, if it's not a range yet, then I think it will be a range soon. Let's put it that way, right? We could kind of really start here, to be fair. And so if price were to at least bounce off this bottom here and then head up, that would make me feel better about saying that this is a range. But this is what looks like is happening, right? So we did have some economic data come out today, but I don't think it's affected the Bitcoin charts very much. Opus minimus, what? Not 2:30 in the morning? Yeah, I mean, 2:30 in the morning in what country, right? Like, maybe 2:30 in the morning in Sri Lanka or something. All my Sri Lankan buddies over there take advantage when they're up at 2:30 after their whatever they do at night. I don't know. I'm just trying to make jokes and they're not coming out. It's too early. Stop trying to make me pretend to be funny. Okay, so before we get into the chart here, actually, let's do the chart first and then we'll take a look at the DAX. We did have one announcement, so let's actually do that. We should probably cover what's already happened and then we'll come back to the chart. 6:15 a.m. my time, so 8:15 EST. Let's refresh the screen. And this data that came out, okay, here we go. Wednesday, non-farm employment change. So as expected, right? So not going to probably affect the markets very strongly at all. Maybe some money comes back into the market that was on the sidelines. I don't think the non-farm employment change is a very important. I mean, it's important, but I don't think it's the most important metric at this time, right? I mean, it's at this point, I'm starting to think that the employment numbers are probably going to start to be more or less ignored because not ignored, but let's just say their effect on markets is probably going to diminish as long as they keep, I don't want to say they're lying, but they do have to always redo the numbers, right? They always have to come back a few weeks later and redo this. Oh, hey, by the way, we have a correction. And it's like, okay, so if you're always having a correction in your numbers, then people are always going to expect a correction. And I think the effect on markets is going to diminish. Opus says, you've got a talking gorilla. Isn't that the truth? I actually made a cool meme for the gorilla last night. If he doesn't come on by the end of the show, I'll share that. But I made a cool, like a GIF for the gorilla last night. So if he's not on by the end of this live lab, then I'll go ahead and pop it up there. But so that's that. We do have Fed Chair Powell, my boy Chowell, speaking today, and that is going to be at 12:10 p.m. EST, right? So just afternoon, Powell's going to speak. The venue is going to be Stanford's Business, Government, and Society Forum. And so what happens is that people overanalyze what he's saying, right? People, well, not overanalyze. They just very strictly watch what he's saying, and any clues that he can give as to his thoughts being dovish, being hawkish, whatever he says that gives clues about what he might do with the interest rate, that's what people are watching for. And if there's a change in his tone from the last time he spoke, or if there's just hawkish or dovish tone in either direction, that can cause markets to change based on that. So just every time he talks, we have to be pretty careful. If, like, for example, I probably won't be in any day trades, right? Coming up in about less than an hour and a half is going to be the services PMI. So this is like there was the PMI for manufacturing, which is a measurement of how well manufacturing is doing. Well, the economy is made of goods and services. Goods come from manufacturing, services are services. So, for example, a service would be your telephone company, or a service might be telephone company. Who has those anymore? Telecom, anyway, right? Let's just say, I think technically like waiters and waitresses and just any kind of service, it's called a diffusion index based on purchasing managers, excluding the manufacturing industry, right? So you have the manufacturer, and that manufacturing PMI was just a few days ago, and it came out positive. Economy good, dollar strong, right? So that's how that came out, and good is usually bad for markets. Again, we did have the wider market take a dip. We had the indexes take a dip, as we looked at yesterday, and we will cover that today. But this is what's coming up next. And I don't, like I said, these PMIs are probably not going to be as strong of an effect on the markets as something like the CPI or anything like that. But they'll have an effect. Like if I was in a day trade, I'd either get out of that trade or would at least tighten up the stops on that. I'm not in any day trades at the moment. Market, again, because Powell is speaking, the market is slowing down a bit. So the opportunities to take trades and the volatility is going to flatten out, I think, because a lot of people are just on edge, wondering what Powell is going to say. And of course, you can't trade when such things are like that. I got a potential short on the euro. Let's take a look here. Okay, do I want to take this short? This would be a scalp. Let me expand the screen here. Okay. So one of the things I've noticed is that because I'm doing these shows, I end up not taking trades, and that doesn't work for me. So, I am going to start taking more trades on these shows. Now, if I did take this trade, it would be a short scalp, but it is within my metrics. So let me go ahead and manipulate the screen here. Give me just a moment. All right, we got the euro. Let me move this over to my trade station and put this where it belongs. Okay. Yeah, this would definitely be a scalp. This actually, what it really looks like is a breakout fake out, because you have a consolidation breakout. So from strictly consolidation breakout look, this is not the best short to take, right? Because it looks like it's just going to dive back into the consolidation where from whence it came. So where did my trade station go? Here it is. Let me just go ahead and put that where it belongs. Yeah, I would have to scalp this on a lower time frame if I were to trade it at all. I mean, it's not the best trade. Let's see. I might just pull this little steak dinner out of it. So the problem I have is that it's not likely to break below this consolidation. That's the issue. Of course, I could swipe a little money out of it, but the risk to reward isn't really in my interest, right? So you can see this little red tab, that's my algo. Now, I do use these in conjunction with other metrics, right? I don't just like go long when this says go long, go short when that says go short. That's not how this works. But I mean, I guarantee you, if I went short, there's a good chance price will come down. But you see how this consolidation is here, right? So you have this whole consolidation that really is better defined here, right? But you also have a shadow consolidation that also is just before. So you have a lot of price action in this area that is going to block price from going down probably. I mean, it would take a pretty significant amount of power, especially in this kind of flat-ish market prior to Powell speaking. There's not going to be a lot of follow through. So I can't take this trade, right? The best I'm probably going to get is a move down to here. And then what's my risk to reward, right? My most recent structure is all the way up here at the top of this mark right there. It's my most recent structure. So if I go short there, my risk to reward is, and there's going to be a spread, but essentially the best I can do is not even a 1-to-1. It's not worth it. It's not worth it. But I mean, it's just, if I did get price to head up a bit and then, have another alert like that, then perhaps, but already you can see price is heading up, even though, like I said, it's just, there's no follow through right now. So this is not a trade I can take. If there was more volatility and if the price action didn't have this entire consolidation right here, I would be interested in it. But in reality, it's just not what's going to go on. And plus, there are some higher time frame metrics that tell me price will probably continue upwards. So, it's just messy, man. Messy. So let's see here. Technically, there is a divergence on this. Yeah, no, it's just not enough meat on the bone. Let's go back to Bitcoin. Let's see if, okay, no questions. I don't see any questions in the chat. So look, we talked enough about the economic data coming out, right? So we know that today is going to be a slow day in the markets, which is why I didn't take that trade. So that being the case, then what do we do, right? Well, we pretty much got to just watch what's happening in a higher time frame, develop some theses as to what might happen. Theses, T-H-E-S, theses. That's more than one thesis, right? So we're going to develop some theses on what's going to happen and, act accordingly, right? Okay. So Bitcoin's in a midpoint in this little bit of a primordial, developing range. And with that being the case, it's a real question of which way is price going to go. Now, these liquidity nodes are from yesterday, so we do need to grab a fresh look at liquidity over on the Kingfisher. So let's do that. And we'll see what's going on with the exchanges. Oops. All right, that's good. Okay. Bitcoin, all leverage. Let's spin it to win it. See if we can grab some more credits. Spin again, it says. It's funny, once you have a certain amount of credits, it'll just have you spin again over and over like this. So I probably won't do this more than 3 times. Yeah, I understand it. They didn't design this for you to just stack credits. They want you to pay, and that's good. These guys have a great business. The Kingfisher, I've actually bought and paid for their business before, especially if you'd like to use options data. It's amazing. There's a link in the description if you want to buy the Kingfisher. And anybody who seriously trades crypto all the time, like hard traders, that I wouldn't even work without this. I trade crypto a lot, and again, oftentimes I do purchase this. I'm just not in the middle of having purchased it right now. Not a lot of liquidity to the downside, just not. All the liquidity is to the upside. However, in order for price to go there, the charts have to actually call for a move up, and we're not quite there yet, but it does look like it will happen. So we got a nice spike of liquidity sitting at about 67.6. So we can throw a line, just a nice line at 67.6. Let's get rid of all these old liquidity nodes. This line is at 67.4. We'll just move it up to 67.6. And then above price, above that line, by the way, is going to be a strong node from 69.1 to about 69.7. 69.1 to 69.7. So a little higher than yesterday's. 69.1 more or less to 69.7. So it's very similar to yesterday's range. And so look, if price could bounce right here, and it could, there are some indications that price could bounce. I think what'll probably happen with price right now on Bitcoin is it's probably going to range for a short time. It's already doing that. It might do it for a longer period of time and then head up. That could happen. Let me roll to a lower time frame so we can illustrate this just a little bit more cleanly. Now, again, price will have to want to move up in order for that to happen, and it's not quite there. I mean, price is pretty bearish, so either it's going to move down and then up, probably. Like, my two strongest theses for price right now, if I were just to say, like, gun to my head, what's going to happen, I would actually have a move down from here. I would actually have price go to the bottom of this primordial range, and this would actually support the thesis that this really is a range. This would actually create that move down that we need to see. Now, if it did move down to here, then I would expect it to go ahead and grab this liquidity and perhaps go to the top of the range, right? That's one thesis. And again, price, as far as my algos are concerned, everything's flat. So it's hard for me to, to determine which way price is going to go. And we are seeing a range kind of develop right here. So let me go ahead and code this yellow so we don't confuse liquidity for ranges, right? And so we do have this range developing right here. And it's also on the midline of this higher time frame primordial range, right? This primitive range, I should say. But I'm pretty comfortable with like this, looking like this will range right here for a minute. And if it does simply range there, again, it could range and then head down, or it could range and then head up. And that's just going to depend on the entire market. And a lot of it might have to do with where the S&P goes, the actual traditional finance market. So we will take a look at that, right? But you could see price kind of go like this for a minute and then either head down or head up, either way. So but right now, at least the thesis is that price will range. Just because it's slowing down, volatility is super, super low right now. And the forces are both bearish and bullish, right? It's bearish against a bullish resistance. It's bearish against a support. So that's, when Bitcoin does that, when Bitcoin gets super low volatility and it ranges, then a stability in Bitcoin like that it tends to give alts more of a boost, right? So if Bitcoin slows down, and right now it's in an elevated position compared to, if you look at the history of Bitcoin over the last year, Bitcoin's like super high right now compared to where it was a year ago. It's massively high. You can go back to the weekly chart here and you can see it's just doing beautifully. I mean, Bitcoin from last year was sitting at 15,000. So, if Bitcoin hangs out way up here in this high level and just kind of ranges around, then that's going to be kind of adding confidence to the market. It's like, okay, Bitcoin moved up. The halving is here. Is the bull market, and it's not even breaking below here. It's actually really slowing down in this area. And when Bitcoin slows down at a very high point, then that is kind of a clue that the market is doing really well and Bitcoin's just catching its breath before it goes up. And there's always that chance that Bitcoin, of course, breaks out of that range. Let's go back to the daily. And heads down. But even then, even if it broke out of the range, I think the lowest it would go would be down to this 50,000 area. It's just right now, it's nowhere near that. And everything is like, there's not a lot of volatility right now. So with very low or basically no volatility, price will probably have a hard time breaking this 60,000. So Lisa says, thank you for imparting your observations and knowledge here. Yeah, no problem, Lisa. Thanks for coming on and checking us out here. Lisa, you're in our private group, right? I don't know if you are now or if you were before. I think you're in there. So, we'll be seeing you over there shortly. But hey, remember, you know what? We are at the end, basically. We're nearing the end. So we're going to take a look at the SP 500, and maybe if there's some time, we're going to look at Ethereum. So we're not done here, but just click the QR code in the top right-hand corner of the screen. You can find out about what we do over at algofactory.tech. We help people develop their own trading method so that they can extract money from the markets. And if you are persistent and you test and you do things properly, there's a very high probability you'll develop a method where you can extract money from the market daily or monthly or weekly or, along those lines on average. We have a lot of people who are well down the road developing their own trading method, aka algorithms. So it's really beautiful to watch. And Lisa, for some reason, I thought you were in there, but if you're not, we hope you're in there soon. If you are, we'll be seeing you shortly. In the meantime, let's just take a look at the SP 500 because this is affecting everything. Now, there is some talk around geopolitical events that caused the indexes like the Dow, SP 500 to all fall. Remember, the U.S. equities market is where the world invests, right? And this has to do with the way things were set up after World War II. The deal after World War II was that the rest of the world would produce items. The United States, with its dollar, would buy those items from the rest of the world. And then the rest of the world would in turn take the dollars that the US gave them for their goods, and they would invest those dollars into the US stock market, right? Or the US markets in general. So the US market has a lot of foreign money in it. So that's how everybody was able to profit, right? Germany would produce cars and France would produce wine and cheese, and they would send to America, and the US would send them paper dollars, not really paper anymore. It's all computer now, but they would send them dollars. I'm sure before computers, it was probably done on a credit system. It would surprise me to hear that they actually sent pallets of dollars. But the point here is that the system is still working that way. It hasn't. I mean, it's changed. It's degraded a bit with a lot of countries not using the dollar as the world reserve like they used to, but most countries are still using it that way. We're not, yes, it is a slow move away from that, right? And that move could continue to take years, maybe even decades. We don't know. It's uncharted territory. But the point here is that with a lot of money in the US markets, when there is a geopolitical event, you'll see the US markets take a hit. And we do see a double top here, right? And this is actually a little bit unique because this formation of a double top can be rather bearish. Right now it has caught and it's stayed right here, but I want to take a look at the algos and I want to see if I'm getting any clues as to what's going to happen with the wider market. Look, yes, the wider market could take a hit. It is possible, right? However, we're at kind of a point where it's sort of a hold or bust. So if price cannot stay above this level, it's going to come down to this level, which would be a little bit more dramatic of a decrease than we've seen in a long time, right? So if you look at the way that the SP 500 has moved up, and the Dow and the NASDAQ are going to look very similar, right? These kind of moves on the way up are very common. And we haven't seen a move down that is greater than what we just saw since probably December 23 saw a bit of a move down. And after that strong move down, it really moved up, but we really didn't see strong moves down, a very strong move down since, say, August of 2023, when everything kind of, really took a break. And now when that happened, the S&P 500 went from 4630 to about 4130, which is, I don't know, 5%. And then it just rocketed up after that. So even if we do see a bit of a reset, look, as long as the SP 500 doesn't go below like 4,600, then the trend will probably continue up, right? There's a couple of key areas right here. So we're going to watch the SP 500. We're going to see how this trend operates. And there's a high probability the price will just range kind of where it is and then pop up. If the SP 500 and the rest of the indices do take a hard move down, then there's a decent chance that things like Bitcoin and everything else will move with it, right? There's a lot of talk about being risk off. And by the way, you got to watch out for the rate cuts. I know that the rate cut odds actually have decreased with this move, but that's just with this move. This move could reverse and head right back up. So now if the rate cuts happen, that can actually cause price to drop in the markets. That can cause, everybody thinks when the rate cuts happen, price is going to go up, right? Oh, money's cheaper. But when there is a series of cuts all in a row, it's kind of a chicken and egg theory, but it's not until the end of those cuts that you see the stock market really start to go up, right? So we don't want to be too, dovish, and I don't want to say we don't want to be too optimistic just because it's possible that the rate cuts happen. It could easily happen that we see rate cuts and the stock market actually falls. Now, Bitcoin is correlated to that market, except for when it's always going to affect Bitcoin. But so far in history, when Bitcoin is in an expansionary phase, it does its own thing, right? Now, we haven't seen Bitcoin bull market inside of a traditional finance bear market yet, and we're not there now. We're not anywhere near a bear market now. So, I would expect crypto to remain strong unless something really crazy happened in traditional finance. So this little blip that we're seeing, it's not a big deal. Even if it continues down, even if it goes down to 4,600 or anything like that, I would not be terribly concerned about this right now. And in fact, I think whatever happens with these equities markets, as you can see, even these moves down like we saw in 2023, price just got lifted right back up. And last thing I'll say before we go is that we are in an election year. So, the incumbent is going to make sure that money is, at least to the best of their ability. The incumbent himself, I don't think he knows what time of day it is, but I think that the people who are around him will do what they can to keep markets headed up, right? Or at least to keep markets stable during an election year. So there is that. Okay, good. So we're at the end of the private live lab. So again, hit that QR code that you see on there, and we do help people with this kind of stuff. We do this every day, man. We come on here every day. Like I said, there might be a slight change in the schedule for this particular show. So, keep your eyes and ears open for that. And otherwise, I'm going to go ahead and jump over to the private live lab. Again, we do help people build their own trading methods, something that they create themselves, right? We teach you how to build that. We teach you how to test it. We teach you how to, in fact, speaking of the gorilla, here he is. What's up, brother?
What's up, guys?
The GIF I made for you, bro.
Dude, I love it, man. I love it. I was yesterday. I went to the theater. Went to go see King Kong Godzilla with the family. It was great seeing Kong. He's like a spirit animal of mine, and was perfect.
Here it is on the screen.
It's brilliant, dude. That's actually a brilliant GIF.
That's not bad. It's actually super easy to do. I can show you all. It's all using free AI stuff.
AI is a game changer.
It is something, isn't it?
It is.
Yeah, it's badass, man.
Mm-hmm.
Ah, man. So yeah, give us that send off, bro.
Yeah, guys, listen, don't sit on the sidelines wondering if this is for you. Should you try it? Should you not try it? Look, you go try Rocky Road ice cream. You do Algo Factory, and that's the difference here. We're the only place in the world where we not only teach you how to trade, but we teach you to build the algorithms that trade on your behalf 24/7, 24 hours a day, 7 days a week, no matter what market, no matter where in the world you are, it applies everywhere. That is the beauty of our system. Secondly, or thirdly, I would say you're going to get the geoeconomic rundown. Find out what's going on globally. Find out where the markets are going before they get there, and how to trade accordingly. So you're going to get the best actionable intel right here. AlgoFactory.tech. Join us or die broke.
Join us or die broke. That's good.
Join us or die.